A few days ago, a possible embargo on Russian energy supplies and the epidemiological situation in China were dominating media headlines. But now the situation has changed, and the main news topics do not include such reports. Amid this information vacuum, the oil market has managed to stay firm in the area of $105 and $110 per barrel. The trading range is certainly quite wide. In the last few months, all markets have seen increased volatility, so now it comes as a no surprise. Since oil is standing still amid the lack of news, only fundamental factors will be able to make the market move. Probably today's speech by Joseph Biden will be a driver. The head of the United States is expected to announce new sanctions against Russia. If he makes any comments about energy supplies, oil prices may well gain strong upside momentum. If Biden does not touch on this issue, the commodity market will most likely remain unchanged. Now let's take a look at the trading chart. Brent crude oil futures halted the corrective slide in the area of $105 per barrel. As a result, the benchmark rebounded, pairing some of its early losses. The volume of long positions will most likely increase if the price consolidates above the 110 mark on the 4-hour chart. In this case, the asset will have a chance of hitting for the resistance level of 115. Gold, which showed solid gains a week ago, seems to be returning to the range of $1,920 and $1,940 per 3 ounce. The quote slowed down in the area of $1,940 and then rebounded by about $47. To extend gains, the yellow metal needs to consolidate above the $1,965 mark on the 4-hour chart. Otherwise, the asset may resume its correction and break through the variable support point. This growth can be attributed to tightened sanctions against Russia and retaliatory sanctions on Western nations. That's the reason is rising global tensions. In recent days, European Union and the United States officials have been hardly talking about sanctions. More precisely, they say that restrictions will be introduced and strengthened, but do not go into detail. Against this background, market participants might have come to a conclusion that global tensions somewhat subsided. However, Joseph Biden may well announce the need for new and tougher sanctions today. This in turn will lead to consequences. In other words, risks may instantly increase along with the demand for safe haven assets, including gold. Meanwhile, the Russian currency remains pretty stable. It has been trading around 80 rubles per dollar for a few days. For the most part, the ruble is moving slightly below this level, and the fact that the quote is holding ground below the 77 mark indicates that market sentiment is changing. At the same time, there is still a signal of the ruble's overbought status. Thus, the situation is rather uncertain. Trading volumes have reduced. There are local surges, but traders remain confident that the strengthening of the ruble is a temporary phenomenon. Notably, despite the lack of statements by the European Union and US officials regarding their intention to tighten sanctions, the ruble is not in a hurry to gain value. This indicates that the ruble's upside potential has been exhausted, at least for now. Moreover, its regular advance above the 80 mark points to the need for local correction. In other words, the US dollar has every chance of rising above 80 rubles in the short term. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.